Today we'll talk about the dollar and whether or not it might trigger a top in metal prices. We'll specifically look at silver as it suddenly looks quite fragile, especially following last week's Wall Street Journal article about it being a magnet for amateur investors. Looking at stocks, I think they're quietly coiling before a next push to new records, and I will explain it in terms of market breadth. And one of the subscribers, or rather one of the viewers of this channel, asked a question to analyze from a technical perspective futures for orange juice and cocoa. And we will do that because, you know, those two things are very tasty, so I decided to put them in. If you're a subscriber, or rather, I'm sorry, if you are not yet a subscriber, subscribe to this video, like, share, and comment on this video. This is what keeps this channel going and helps promote it. If you are already a subscriber, stay tuned. There will be a video separately for you guys. I will send it out soon, probably tonight, hopefully, maybe even tonight. And we will cover some of the securities not covered in the general video. Treasury bond yields look kind of a little bit weird, especially on the long-dated side. Lots of ETFs, some of the large cap stocks, and speculative securities. This week we added a few that are of interest, such as Cybin. I actually have a position in Cybin, which is a psychedelics company. Pebblebrook Hotel, some of the other ones that were not mentioned last week, I think Rexford Industrial Realty, and many more. So stay tuned for that. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com and following the link in the description. Okay, let's get started. We're currently looking at S&P 500. So this week was a little weird. It was broken up by two holidays, so not exactly complete or comprehensive week, but nevertheless, these are all-time highs that were set last Friday, the 26th of December. We pulled back a little bit. Basically this week we pulled back. However, Friday looks like today more of a hammer-like candlestick. So by and large, the week was not very conclusive, I guess is the word. So why do I think we will continue making records? For that, let's look at some of the market breadth indicators, or just one today actually. And in this case, it's total put-to-call ratio on the Chicago Board of Exchange rather. So this is a backwards indicator, or not so much backwards, but the opposite. So you notice that when the amount of, so it's put to call, so put divided by calls. Put on top, calls on the bottom. Puts are bought when many market participants think the market will go down. Put, we're putting things down. Call are the opposite. Calls are bought when we have market participants think the market will be going up. So notice that we have several spikes of this indicator into this overextended territory into the put area. Okay, so I marked them by this blue vertical lines. So there is one right there back in August 2024, another one in November 2024, another one here in April 2025, the famous tariff freakout. And then another one, not as strong, that occurred relatively recently in late November of the last year, 2025. And another one that is literally occurring right now. We have a spike of puts. So in other words, people think that market will collapse into this relatively overextended category area. But in other words, more people think that market will collapse than people think that the market will continue higher. And it's a contrarian indicator. When more people think that market will collapse, the opposite usually happens. Now, notice that we are not really like even remotely overextended to the downside. Whereas here in November of this last year, we were at least a little bit, extended in the direction of the downside. Right now, we're just barely, we just pulled back from the all-time highs. Yet, if we look at the put-to-call ratio, we're getting the same readings as if we were back in December, or rather in November. So, what happened in November? We got a rally towards new records. I'm pretty much thinking that we're going to get another rally towards new records at this point. And I think that's this is the way I think about this. Again, make a comment in the section. What do you think about this analysis of the S&P 500? Because basically this is it as far as the stocks are concerned for today. We're going to talk about commodities for the rest of the video release. Alright, so let's look at the dollar first and why I think the dollar may have bottomed. There's a very good chance of that. I kept talking about it even back in September of last year when I saw this 3-year low on September 17th, and I'm like, this is just not right. I think we're going to get at least a counter-trend rally. We got a small one. I was thinking it's going to get stronger towards the red line. We got like a mediocre one. It got stopped at previous August 2025 highs. So why am I thinking that right now could be that final day when dollar turns around? So the reason where I'm getting this from is from projections of my indicators into the future. So I have the 2.0 and the 6.0 basically just means that we're projecting the indicators into the future. Now, these projections are not always useful. However, they are somewhat useful when we see things like this, when we see alignment. So current indicators line up perfectly with the way future indicators are aligning. Let me show you when they don't. When they don't align. Let me show you what it looks like. So it looks like this. There's no alignment, for example, for the chart of S&P 500. But for a chart of dollar currency index, there is an alignment. And notice the way the indicators are curving towards the price action. So price is right now way below the yellow line here. We're barely off the 3-year lows. But the indicators are curving, and they're going to get very, most extreme in this respect on February 23rd of this year. So in just a couple of months. What does that mean? It means that the price doesn't need to travel that far to get to the bullish levels. So let's just compare it. So right now we're prices below this yellow support resistance line. Again, you can find out more about these lines at my site. And right now the distance between the two lines, in this case the yellow and the blue. Why the yellow and the blue? Because above the blue line is bullish market, is a bull market. Below the red line is bear market. It's just currently happens to be below the yellow line, and I'm just showing it to you for comparison purposes. So from here to the bullish levels is 6.48 units, points, or about 6.5% or so. Now let's look at it just in the near term, in the near future. So from today's price action until the blue support resistance line, in the near future there is only 2.9% or 3%. So it's literally half. So the price will need to travel only half the distance towards the bullish levels relative to what it is right now in just February. In other words, even if the price for the dollar currency index trades like almost sideways and just rises a little bit, it could conceivably relatively easily get above the blue support resistance line, and then the security, in this case dollar currency index, will become bullish. Why the long-winded explanation? So let's look at some of the precious metals. So last week I mentioned an article in the Wall Street Journal which said that this rally was driven in large part by retail investors jumping on this. possibly. Or additionally, the retail investors became very interested very recently. And when I see this type of articles in the Wall Street Journal, it means that the move has already occurred. Again, you can argue with that, and I can argue with that many times as well. But the move is indeed huge. If you just use my indicators, and let's say you just bought it back in April of last year, silver was $31. It went as high as $83. And that is how much? Let's see. That is about 160% gain. It's a very significant gain, and it's just, a few months, basically, like 9 months. So looking at this chart, I'm looking at it and I'm saying, okay, this is very overextended. This candle, okay, I'm going to zoom in now on the last price action here, and the last few days of price action. Okay, so here's how it looks like for the past few days. So we had this tremendous green candlestick on Friday the 26th of December, so last Friday. That's exactly when the article came out in the Wall Street Journal as well. And I was like, this just smells of a buying climax. I think this just, it's so big. I mean, I'm showing you just the last candlestick, but like it's nothing like anything we've seen before. It's a gigantic candle compared to other candles. And when you see this type of candle at the end of the move, and I'm presuming that's the end of the move, but just looking at this entire move from $31 to $80, it looked very overextended. Then the next day we get this huge spike into the stratosphere around $83, and this is Monday the 29th, followed by a gigantic collapse, basically. So this is a classic shooting star candlestick with a close near the lows. A reflex bounced the next day on the 30th of December, and yet another strong selling on the 31st of December. Finally, today, when the markets opened after New Year's holiday, we saw this action, and this one is actually even more telling. So notice how the price came up towards this green support resistance line, ran into support, and bounced off of it. It closed above the entry, above the open, but still, it's looking like it's also a shooting star-like candlestick. So all of those taken together, I wrote here for my subscribers, this definitely is a top-end candle. I mean, it's very top-end candle. This is a buying climax, I think, on the 26th of December. And now we have resistance. So we have resistance at the green line. Can this resistance be overcome? Absolutely. And it has been done in the past. So look, we dropped below the green line, we overcame the resistance and made new records. Can it happen again? Absolutely. But again, after such a huge run, there is a good chance at least a consolidation might be in order. So can we see a consolidation, maybe like price trading just sideways into February? Yes, but why February? As I just showed you, dollar currency index, it has this narrowing of the trading range, I call it, where the indicators are coming together closely. We're literally going to half that trading range as early as 18th, mid-February. So if we see sort of like a sideways action for silver, going into January, February, and at the same time dollar basically trades more or less sideways or slightly up, dollar enters a new bull market, then silver will come to a renewed pressure, under renewed pressure, and most likely will collapse, or at least pull back sharply. So this is my reasoning right now for the way silver has been behaving and the way dollar has been behaving. Let's look at gold, XAU divided by USD. So up till recently, again, gold has been winning this battle because dollar has been extremely weak. Gold has been making new records. New record was just made a few days ago. It is not as obvious that this security is topping as it is obvious for silver. However, they do come in tandem usually, so if one goes, the other usually also goes. There's a huge amount of correlation between gold and silver. It is not yet as obvious as it is for silver, but so let's look at another security, and in this case is gold miners, GDX. Also all-time high on the 26th of December. Can we again continue making all-time highs? Yes, absolutely. But once again, but because gold miners are pretty much tied to gold, and their correlation to gold and to precious metals are very high, it is reasonable to expect that we are going to see a pullback for anything precious metals related, especially if the dollar continues to do what I said. In other words, at least not drop, trade sideways, possibly slightly up. Maybe very soon we'll see that translate into downward pressure for gold and for gold miners. So again, make a comment. What do you guys think? I need to hear the opinion of the viewers, and if something wasn't clear, or if you want me to explain something again, please make that comment as well. Now let's look at some of the other securities that I never trade this. This is orange juice, so I have no idea what the futures are called. I happen to prefer to look at contracts for difference, CFD, and this was available, so the name is orange juice at Capital.com. Okay, so orange juice has been in an uptrend. Okay, how do I know? Well, it's been making higher highs and higher lows. When did the uptrend begin? Well, we can go back and we can look at my charts, and we can determine that very easily. So for commodities and forex, I use these two lines, the blue line and the red line. The yellow line is usually reserved for stocks, because I give, when we buy stocks, we buy and close above the blue line, set the stop, initial stop, just when for the beginning at the yellow line, and then once the target is reached, we take the stop from the yellow line and move it to entry. And then once the entry price is below the blue line, we move the stop to the blue line. Okay, that's for stocks. For commodities, such as orange juice, we don't use the yellow line as a starting stop, initial stop. So the initial breakout occurred right there on 7th of June 2021. How do I know? Because it closed above the blue line, whereas previously it was still below the red line. So even this latest opportunity to sell short, where I'm hovering on the 26th of May 2021, would have been a valid short entry. It just would have been, negated a few days later. Okay, so you would have been able to short it here, for example, but then after this date, on the 7th of June of 2021, that's it. We're now in an uptrend. Okay, so we would have been buying here. We would have been buying pretty much any time we closed, or rather had a low below the blue line and then closed above it. So opportunities to buy, I'm marking them. They're pretty obvious, aren't they? Okay, do we get 100% success? Of course not. You would have been stopped out right here, but then you can re-enter on the long side. And then these, for example, were pretty profitable. This was like in 2022. Okay, so we continue forward, and we can see that there were opportunities such as this on multiple occasions. The trend remained intact. We just simply re-entered as we went along. And so, for example, another opportunity there. back in January 2024. Another opportunity here in February 2024, and now we have actually this is incomplete. It ends in September, but overall, interesting. It looks like they stopped trading it in September. Overall, I guess we could do the same thing if we look at futures. Orange futures, I don't even see them, honestly. Anyways, the gist of the matter is back in September, I didn't realize it ended here. I don't know why the price ended here. As of September 2024, it was in an uptrend. But if you have my indicators, it's pretty easy to analyze this type of securities. All right, let's continue to cocoa. Let me check first where it ended. Yeah, okay, so this one actually, same, it trades till now. This is January 2025. So let's go back to very recent history for cocoa. Up till this date right here, February 2025, we would consider cocoa to be in the uptrend. But then, where I'm hovering, 24th of February 2025, this security would have entered a bear market, and then we would consider selling it short. Can you do it in the United States? It's difficult because this CFDs, contracts for difference, are not traded. You have to have a futures account, and those are not for the faint of heart. You need to have, largish accounts, and there's a huge amount of leverage. So you need to kind of know what you're doing. Opportunities to sell short. Look at this, a bounce, a rally towards the blue line, a touch of the blue line, but a failure to break above it, failure to close above it. So that's called rejection. And then it turned around, you can sell it short again. So opportunities to sell short. Every time we touch the red line in this case, we touch the red line and then close below it yet again, that's a signal to sell it short. So a high above the red, close below the red. Pretty easy, ain't it? You would be in very good position. So let's say you trade, for some reason you have an opportunity to buy puts on this, or you can maybe buy, or you can sell short the futures. That's a 48% gain if you sold it short in August 2025, and let's say you exited at the very bottom in November. Let me know what you guys think about this. I covered the various securities, stocks. From the point of view, stocks I think are going to make highs because of the oversold nature of the put to call ratio. Dollar could be making a bottom, and as a result, silver especially could be topping, and gold miners most likely will follow. Orange juice is an incomplete analysis because this one ends in September, but you get the gist of it. You understand how to trade it in general if you use my indicators, and the same goes for cocoa. If you have my indicators, you can buy or you can short. Either way it works. Head over to MasterChartsTrading.com, click on sign up for one of the products. Again, I have multiple products that are of interest to you. Namely, I have the trading indicators. So again, those trading indicators, you can trade commodities, you can trade stocks. So for example, Europe, VGK has been on a tear, as many of the stocks in general, but yes, same thing. So for example, here back in April of last year, this Europe ETF, VGK, and then you could have opportunity to buy it because it touched the blue line, closed above it, and to date it's a 24% run. So congratulations if you opened. This was an actual alert back in April of last year actually. So those are the indicators. They're available for TradingView.com. Open a free TradingView account. Come back to my site, Master Charts Trading. Sign up. I will open the door for you on TradingView.com. Newsletters. So again, I send out daily alerts and weekly members-only videos covering many securities that are not covered in the general video. Lots of speculative securities that are of interest to the traders. And both trading indicators and newsletters as a bundle, I think it's the best deal. So you can get that for either a yearly or a monthly subscription. Yearly subscription gives you 2 months off, and also you get free 7-day trial on all of the potential subscriptions. So if you want to sign up to monthly trading indicators, you still get free trial. If you sign up for yearly just newsletters, you still get free trial. You have time to cancel, but very few actually cancel. So sign up and you can start trading very easily and very obviously. That's it for this week's recap. Thank you for watching. Have another great trading week. Bye-bye.